Well, JP Morgan Commodities team's formal view is that in fourth quarter we're forecasting a Brent price of around 117 and then next year around 117.5. Fundamentally, while we've seen Brent come off somewhat because of the geopolitical events around Syria unwinding, and we're into refinery maintenance season where incremental demand tapers off temporarily, the fundamentals of the oil market remain tight. We believe further supply side issues or geopolitical issues impacting supply, and demand seems relatively robust. So we're positive on the oil complex, at least going into the year end and next year. Well, I think a lot of this is well known and is being priced into oil markets. And I think if we start to see improving job data out the US and certainly more of a robust economic outlook, whether a tapering happens soon or in the next few months, I think it's the oil market has sort of priced most of that in. And I think as we start to see more supply side issues and possibly tightness or at least a demand recovery as we go into the northern hemisphere winter, we'd still expect oil prices to remain robust. Well, it's a very good question. I've spent the last 10 days with JP Morgan's Australian oil and gas analyst, Ben Wilson, and a lot of the market focuses on China. I think we're in very much early stage exploration in China. And obviously North America is well established. But a country we're actually quite positive on in terms of non-conventionals, ex-coal bed methane, is actually Australia. This is a market, according to the US government, of around just over 400 TCF of shale gas, recoverable shale gas resources, has a good fiscal regime, export routes at the moment with sort of midstream investment to feed some of those export routes. Domestic pricing is on the rise and export pricing remains particularly high. So Australia would be actually a focus point for us in terms of investments around that country. Yeah, it's a very good question. I mean, overall, our formal forecast is globally we're forecasting this year around 800,000 barrels per day incremental oil demand growth, and similar sort of for 2014. And that's predicated on sort of a 0.3 million barrels per day decline in OECD demand, and over 1 million barrels per day incremental non-OECD demand. And a lot of that is certainly coming from LATAM. We're still forecasting around 3% growth, or Middle East and Africa around 2% growth. Actually, a country has surprised us this year has been China. At the start, if you'd asked me what JP Morgan's forecasting for oil demand growth, we'd have said 3%, and year to date we're around sort of 5%. And that is predominantly driven by gasoline demand growth. So we're seeing a robust non-OECD incremental demand, which is supportive to overall global demand.